Hello, everyone. Thanks for joining us today for the release of the HFRX July 2024 Performance Snapshot. With me now is Ken Hines, President of HFR Index. Welcome, Ken.
Thanks for having me on.
How does July look?
July was an interesting, exciting month of hedge fund performance once again. Exciting for a different reason that we've seen in the past months. We saw equity markets hit a major inflection point in the month. Obviously, coming into the month on the back of very strong first quarter performance. And then throughout the month, we saw equity market, particularly large cap technology equity, really deteriorate into the end of the month. And that trend has continued into the beginning of August. At the same time, we've seen European central banks cutting rates and expectations for U.S. central banks, U.S. Federal Reserve, to also cut interest rates. And that has contributed to a bond market rally at the time when you're seeing an equity market decline. And through this pretty volatile month of July and volatile beginning to the performance of August, you've seen strong hedge fund performance across most of the strategies.
Looking specifically at the month of July, what was our top performing strategy?
Event-driven led all hedge fund strategies with a gain of about 1.5%. Overall, the HFRX Global Hedge Fund Index gained about 0.75%. So event-driven strategies were the leading area. Fixed income-based relative value strategies, 1.2% gain there. And obviously, those had a strong tailwind of performance because of interest rate declines that we saw and some tightening of spreads there. Equity hedge also posted a gain, which is interesting because, as I said earlier, the trend of the large cap technology equities has really been the dominant trend in equity markets for a couple of years now, really shifted throughout the month. Equity hedge index gained 71 basis points. And again, we have here for the month of July, comparing that to the decline of about 0.75% for the NASDAQ, we did see a negative return of one of the four strategies, the HFRX Macro CTA Index, which declined 1.1%, which you can recall from our previous videos that was one of the leading areas of performance in the first half of the year.
And then at the sub-strategy level, what was a top performer in the HFRX?
Yeah, you can see here, consistent with that previous slide, it's really the event-driven space where you see you're still seeing a lot of announced transactions. You're also seeing another interesting trend in the equity markets. We talked about this in the last video, was that we saw a 10% gain in small caps in the month of July, even though large cap technologies actually fell. And I think that's very supportive of trends in event-driven. And we see the top two sub-strategies here, merger arb up 2.6%, and event-driven special situations up 1.4%. So even though you've seen the large cap technologies sell off after a very long period of leading the market, you still see where the target companies are in merger and special situations. Those areas are still gaining in the month of July. RV multi-strategy, again, is really where most of the large credit multi-strategy that have a lot of different fixed income-based arbitrage trades, 1.2% gain there, 1.1% in equity hedge fundamental value. So it's probably not surprising that is one of the leading areas of performance, because overall, large cap equities did relatively well, and even small and mid caps did well. The part that didn't do well, again, was large cap technology equities. And that trend, as I said, has continued and it actually accelerated into early August. Finally, we have about a gain of 0.78% in equity market neutral, which, as you know, are generally beta neutral or dollar neutral and really driven by mean reversion of factors and things like that. So all of those five areas outperforming the decline of the NASDAQ for the month.
So with event-driven sort of emerging as a front runner for July, does that shift how year-to-date the performance has been for HFRX?
It's moved it up a little bit. You can see here that if we compare the performance of all the strategies to U.S. large cap equities here, those had a really strong gain. Those gained, the Dow actually gained 4.5% in the month of July. So it was a very uncharacteristically strong surge for that area of the market. But for the year to date, 8.3% there. So you have about a 585 gain in equity hedge. So that's still the leading area of performance, but event-driven has moved up after a relatively slow start to the year. It's moved up in the month of July. You can see that here that the global index of all the strategies is up 365 for the year. Macro, even with the decline in the month of July, is still up over 3.4, almost 3.5% thus far for 2024. 2.7% gain for event-driven. Like I said, that moved up as far as the leading area of performance in the month of July. And then finally, you have fixed income-based relative value, gain of 2.3%, obviously very steady and strong performance given that we began to see yields fall in the month of July. And that's a trend also that has continued into early August.
So looking year to date at sub-strategies, what is our front runner?
Yeah, so you can see here that growth, even though it wasn't one of the top performers in the month of July, is still the leading sub-strategy for the year because it was so strong coming into the year, and there were so many months there where the large cap equity trade really dominated. You see 7.7%, really almost in line with the Dow Jones of 8.37%. Also, for the year, equity market neutral, which is categorically a very low volatility area of the industry, factor based, mean reverting, dollar neutral, beta neutral, 5.11%. So strong performance there, nearly 5% gain in fundamental value. So really, three top areas of sub-strategy performance in the year to date are all in equity hedge. 5% gain in fundamental value. We talked about that earlier, where the big difference between the growth and the value is that kind of a less of an emphasis on the large cap technology stocks, which have really driven the growthier names. And then you see macro, systematic, diversified, trend following CTAs. These didn't have a great month in the month of July, but given that they started the year in such a strong way, even with that decline, it's still the fourth leading sub-strategy area for the year. And we haven't talked a lot about commodities yet, but commodities were very weak in the month of July as we began to see weakening data on the U.S. economy and weakening data on inflation, and these expectations for interest rates are coming up. That's where we're seeing some of the performance weakness in the macro space. And then finally, the fifth leading area of sub-strategy performance year-to-date, special situations, which, as you know, obviously has all the transactional finance component of like merger arb and things like that, but it also has more equity beta, more credit beta. It's more, it's a little bit of a more sensitive to equity market performance. So that's actually a great thing that even in a month where we began to see the equity markets hit an inflection point, you still had very strong performance across event-driven and the more beta-oriented event-driven sub-strategies for the year.
Well, thank you, Ken, for sharing your insights. Is there anything else you'd like to share?
Yeah, I just wanted to bring to everyone's attention, obviously, if you're watching this video, you know we do regular performance updates on YouTube. So please subscribe to the channel. We're happy to go into greater detail or answer any questions that you have. You can obviously arrange a call with me, Ken Hines. You can send an email to me or any of your contacts at HFR, or you can email indices@hfr.com. We have a new website. It's just up a couple months ago, www.hfr.com. Please visit that and create an account, register as a user there. And when you do, please look at the investor guidebook. You can download this really great resource that we have on the website that really outlines a lot of the institutional extensions and the institutional utility that people are using the HFR indices for. So please take a look at that. And if you have questions, feel free to reach out to me to set up a call to discuss anything you see there.
Thank you, Ken, and thanks everyone for watching.
Thanks.